Hey everyone, welcome back to your weekly market outlook. This is for the 1st of September 2024. Obviously, we're starting the month in September with a lot of data for this week. So let's take a look at last week first in terms of the data that we have here. Obviously, we have inflation numbers coming out from Australia. We also have inflation numbers coming out from the Eurozone. If you take a look at the Australian numbers here, we got 3.5%. That's a little bit of a drop from 3.8%, but it is still higher than a consensus of 3.4%. Similar situation here. If we take a look at the preliminary CPI numbers coming out from Germany and Spain, they are below consensus, so there's a huge drop in terms of what we're looking at here. GDP numbers coming out from the US, that's an improvement, 2.8 to 3%. And Tokyo Core CPI also went up from 2.2% to 2.4%. Euro flash estimate here remains flat here, dropped from 2.6% to 2.2% as per consensus. If we take a look at a core estimate there, it's also falling off slightly, 2.9 to 2.8%. So this opens up further room for the ECB to actually start cutting interest rate. And PCE numbers from last Friday in the US, that comes in as per consensus. But if we look at the breakdown there, the reaction to the market, it was that of a stronger inflation number there, but in fact the actual number itself is actually pretty tame. So we were looking a little bit more on the end of month adjustments, and that kind of propped up the US dollar a little bit. But in terms of the PCE numbers from the US, in fact, it is actually cooling off a little bit. Okay, so that's last week. I don't think there's a lot to take in from last week, and I don't think there's actually a lot of market reaction, and I think a lot of traders are just waiting for this week to kind of just wait out for the NFP and as well as the unemployment rate, see if the number matches up their needs in terms of the FOMC cutting more than 25 basis points. So let's take a look at this week's data here. Obviously on Monday, you're going to have a little bit of a quiet market here. The Canadian market and the US market is actually going to be closed for Labor Day. So it is long weekend in the US, so the US market is actually going to be closed. We have the Swiss CPI numbers, that's going to be on Tuesday here. Again, we're looking at this improving a little bit, negative 0.2 to 0.1%. GDP numbers remaining the same. Australian GDP numbers, we're expecting a little bit of an improvement, 0.1 to 0.2%. Bank of Canada expected to cut interest rates here, cutting from 4.5% to 4.25%. So I believe this is going to be the second rate cut from Canada. JOLTS job opening numbers, not a huge difference here in terms of what market expecting, 8.18 to 8 million. And then we have the ADP NFP number, that's going to be on Thursday. And then we have the weekly unemployment claims. But again, a lot of focus, all traders are probably just going to say, there's a lot of data here before the NFP. I think that's going to be a lot of noise there, but we're just going to wait for the NFP numbers, which is going to be released on Friday. Now, if we take a look at the NFP numbers here, we're expecting a little bit of a bump up from 114,000, which is kind of a really low number for NFP, to more of a normal 164,000 gain here. The expected unemployment rate is for the unemployment rate to go down a little bit from 4.3% to 4.2%. Obviously, if we have a higher number, that's going to be the driving force that the market is kind of looking for. I'll just be honest with you guys here. I think a lot of traders are probably just wanting the numbers to be bad, because if we have a bad number, then we are going to have that exaggeration in the market where everyone is just pricing in for a 50 basis points cut from the FOMC on the 18th. So that's on schedule for this week. This is what's on schedule. Again, a lot of focus will be on the unemployment rate. I think the limit here for the FOMC is basically 4.4% in terms of the unemployment rate. So we'll see what happens here, whether or not we are actually going to see the unemployment rate improving, or are we going to get the unemployment rate being worse, maybe punching above 4.4%. All right. Let's take a look at the technicals. This is the Aussie USD, and for the Aussie USD last week we mentioned that we're looking at 68 cents. That's likely going to cap further progress for the Aussie here, and that's basically the case with the Aussie USD. You can see the market has been it's pretty much capped at 68 cents. It's currently doing a little bit of a pullback here, not deep enough to confirm a strong retracement here, but so that, you know, for the Aussie USD here, we're still looking at 67 cents as, you know, kind of stronger support level to watch out for. That's also where the support too is on the weekly pivot. So we're anticipating that pullback closer to 67 cents. So we'll see what happens there. But again, given the current situation on the Aussie USD, you know, any drop below 67 cents, it's really not that big of a deal here, as long as it's able to maintain above 66 cents. If it does close below 66 cents, though, it will cause more of a much larger swing on the Aussie here. But for now, this is pretty much stable, still within range and calculations. We're looking at 68 cents as our resistance. We're eyeing 67 cents as our support for the Aussie USD. Now for the Euro USD, this one here, you know, it went down a lot deeper than what we are expecting. 1.11 that was broken, so price is currently trading you know, kind of halfway in between 1.1050 range there. You can see here that it is capable of doing a little bit more of a deeper correction here, and I think in terms of a stronger support level, we could potentially be looking at 1.10. That was basically the previous resistance. But if we take a look at the Fips, it does allow for room for this one here to pull back even lower, 1.0950, but we're anticipating price to be well supported at 1.0950, 1.10 so if we still have that view on this one here, maintaining an uptrend. If it does correct lower than what we have here, if it does go back into the range of 1.0850, 1.09, it is still in an uptrend, but it's going to lose a lot of its momentum. It's very hard for the Euro USD to be able to kind of punch into a new high here, potentially even pushing higher than 1.12. So for the Euro USD to be able to break above 1.12, it needs to bounce off max at 1.0950, 1.10 on the Euro USD here. So right now, in terms of what it's currently doing, I think the Euro USD is still in that trajectory in terms of that correction. If we take a look at where the support one is currently located, that's going to be about around the 50% there, which is located exactly at 1.10. So we, again, a lot of traders are going to be focusing on this level here as a much stronger support level for the Euro USD. Pound USD, this one here, a much stronger currency. Obviously, you can see the retracement here. It's only up to 23.6%. Can it go lower, and is it able to do so? Yes. For the pound USD, it is actually able to come down even lower, closer to 1.3. That's going to be located around where the support 2 is located. That's also where the previous resistance is located on the pound USD. So that's how far it can go, right? I mean, it can even go all the way down to 1.29, but if it does go all the way down to 1.29, we might actually be losing a lot of momentum for this one to continue to go to the upside. So for this one to maintain its uptrend, ideally we don't want to see a drop below 1.3, otherwise it's going to lose a lot more momentum. So any bounces off 1.3050, 1.3, that's ideal for the pound USD. Now, with the sterling here, this is a much stronger currency. Again, this is more on the message given by the Bank of England in terms of, yeah, they're not really sure that inflation, it's really cooling off. So they might actually hold back a little bit in terms of their interest rate cuts. And, you know, whether or not price can bounce off the current level, we're looking at the range here, basically between 1.3 to 1.31. Any bounces off this range, that's going to be an ideal bounce for the pound USD. And, you know, any bounces there ideally should be able to take the pound USD higher, potentially to test 1.33. All right, lastly, we have the dollar Japanese yen. Now the dollar Japanese yen, if we take a look at it on an intraday scale, it is a very volatile currency. On a swing trade, if we take a look at what's the current condition on the dollar Japanese yen, it is now back within that range of 145, 146. Now this is likely going to take a while. This is more of a transitionary level here for the dollar Japanese yen. Should it be able to maintain that position above 146, then yeah, it might be able to punch higher, probably closer to 148. But no matter what, we're still looking at the dollar Japanese yen being in a very strong bearish downtrend. And the fundamentals here is that the Bank of Japan is likely going to continue to hike interest rate, while the FOMC is going to start cutting interest rate. Now, obviously, if we talk about the interest rate differentials, in the long run, it doesn't really matter much because the distance between the Bank of Japan and the FOMC in terms of interest rate will still be a minimum of 2.5%. That still gives a potential view that carry trade might be revived in the future. But for now, I think there's a lot of struggle right now by amongst buyers and sellers in the market, and it is a very, very volatile currency here. The average daily range for this one here is actually at about 150 pips. So I would steer clear from the yen crosses if you're not confident with your trading skill. This is going to be the much more difficult currency to trade. Now 145, 146, obviously this is going to be the contested level on the dollar Japanese yen. Currently we're looking at 146 acting as that bit of a resistance here. Right now we are testing 145. So for this week, in terms of where this is likely going to go, I think on Friday the NFP numbers and the unemployment rate is going to be the much bigger factor in terms of determining where the direction is for the dollar Japanese yen. Anything in between, we might actually see that extreme volatility continue to happen on the dollar Japanese yen. Alright, so with that, good luck with your trades for this week, and I'll see you soon.